This is episode 11 of Old Man Yells. This is the third installment of a series about public miners. The first was on Core Scientific. The second was kind of on the public sector as a whole. And really, the third is about being public. And so I'm going to start really with a premise. And the premise is that it's not possible to operate a public mining company consistently within the ethos of Bitcoin. And I know that's somewhat of a bold statement, but we'll go into this in a little more detail. And I think we'll start really by looking at, why do companies go public? Not just mining companies, but any companies. And typically there are a couple reasons. One is that they need to raise capital. And there are different ways to raise capital. Certainly you can do it privately. Many companies do. But going public is a very common way to do it. And part of that also really has to do with executive incentives that the founders and often the key management that were part of this whole thing are looking for some cash. So not only are they trying to raise cash for the company, but they're looking to put some money in their own pockets. There's often a prestige that goes with being public too. I think there's kind of for some reason, a perception that a company has made it or the people leading it have made it if they take their company public. And of course, there are usually investors involved too. Those might be angel investors or especially VCs. If VCs have been involved, they're looking for an exit. They made an investment in a given company, and for them, they're looking to turn that back into cash, and as much cash as possible, as quickly as possible. And that's kind of the modus operandi. And then finally, there's often pressure. The companies that maybe get perceived as at least being on the cusp of being ready to go public get courted by investment bankers and lawyers, accountants, auditors, all these sort of organizations that frankly their business is taking companies public, and they have a lot to gain by taking a company public, usually, by the way, whether or not that company is successful or not. So they'll do a lot to make those people involved in a given company feel like they're ready, feel like it's the best financial decision. And all those things kind of come together. They're probably for every company in every situation. It's some mixture of those things that drive the decision to go public. When a company does go public, there's often kind of this period of just euphoria that starts when the decision to go public happens. That's kind of like an engagement period. And then there's a wedding, and then there's a honeymoon period. And, through all that, there's just this, like I said, tremendous euphoria that will captivate an organization. It's very easy to get caught up in that, by the way. But then there's a reality that starts to set in, because unlike a private company, which chooses its investors, like us at Barefoot, we're a private company. We have several investors in several different associated ventures, but much of the time, just as the potential investors are evaluating us and the opportunity, we're also evaluating them. It's a courtship, because we want investors that are aligned with our goals and objectives and understand the way in which we plan to operate the company. There's a due diligence going on both sides. But in a public company, that goes away. Now anybody can join, and they may or may not have done their homework. They may or may not have similar goals and objectives to the management team. But the reality is, even if they are not aligned, those perspectives still become important as shareholders. And those shareholders begin watching every move that's made within the public company. But not only the shareholders, but the SEC is watching, politicians are watching, the media is watching. There are rules and regulations, Sarbanes-Oxley being probably the most onerous and difficult one to navigate through. And then, of course, there's the board. And in a private company, it depends on the situation, but often the core shareholders or founders really have a controlling interest in the board, and nothing can happen that they don't want to happen. But public boards have a different level of responsibility and authority. And sometimes those things over time can become at odds with what the management or maybe the core founders had desired. When you're with a public company, especially if you're an executive, a C-suite executive, a key member of the management team, then everything you say, who you say it to, when you say it to, all becomes very material. And sometimes even a very innocent statement can come back to haunt a company. An executive over a martini giving insights to a particular investor or group of people about an upcoming product or a layoff or something of that order can cause massive disarray and often big regulatory and legal problems. At the end of the day, the reality is you come under a microscope when you are in a public company. Now, that doesn't mean that the benefits don't outweigh the downsides. But I think a lot of companies don't think through what these downsides are. And if you haven't experienced, you may not be able to grasp how difficult that really is. Some of you may know, but I was part of taking a company public and was a C-suite executive within that company. That company was Gateway. We went public in 1993. We raised about $163 million in that IPO. But at the time we IPO'd, interestingly, we were already a company with over $1 billion in revenue, again in 1993 with $1993. And we were highly profitable on a meteoric growth path. So that by the time we hit 1997, 4 years later, we had over $6 billion in revenues and over $1 billion in annual profits. We eventually peaked as 194 in the Fortune 500 with revenues of 9.6 billion and 25,000 employees. And at that time, toward the end of that run, that was about where the peak occurred. I was the Chief Technical Officer, Executive Vice President of Products. And I learned a lot about what it meant to be an executive and leading a public company. And I tell you this just so that you know that I've lived this and I've breathed it. I've had to manage within it from inside one of the biggest public companies in the world. So historically, when companies went public, I'll go back to the Gateway days, things were very different. Again, that was 30 years ago. But at that point in time, most companies were much more mature than the companies that go public today. They had achieved a high degree of success. They had a consistent growth record of quarter after quarter performance of profitability and positive cash flows. They had a well-established customer base. They had a well-established product line and a great future product pipeline. They also took their time getting ready to go public. It was usually a multi-year process, a 2 or 3 year process to get ready for the IPO. And so it gave the organization time to either mold the internal talent to be ready to manage in that environment, maybe bring in a few outside people who had been through it before, fine tune all of the internal processes and reporting and those sort of things that have to happen if you're going to be a successful public company. Gateway certainly did this, and we were very successful at it, at least initially. Now, in Gateway's case, I will say though, and I'll talk more about this in a bit, I don't know that that was the best thing for Gateway. In fact, I would go so far as to say I don't think it was the best thing for Gateway in hindsight to have gone public, even though we were very successful, even though our market cap ended up being very high. And I would say most of the early shareholders would say they were very happy with the return on their investment. What I typically see right now, not only in the Bitcoin world, but also in the general world, is companies that are really in a rush. They want to rush to go public. They are trying to raise capital quickly. They're driven by money in a lot of cases. They feel massive pressure to do it. Most of them are relatively immature or naive in knowing what it means. Some of them are just arrogant. But regardless, they have a tendency to vastly underestimate the road ahead. And they're really focused on this short-term prize, which is this massive amount of capital that's going to come in. And again, maybe the prestige that comes with it. But as soon as that happens and the reality sets in, and it sets in quickly, many, I think, will find that it starts to become a burden. It constrains them in a lot of ways. And the very thing that they desired has now become somewhat of an albatross. Maybe even it might feel like you've sold your soul. Now, if you're a company that sells dog food or makes candles, or even like my company used to makes computers, maybe it doesn't matter that much. These are very mature markets, and bad or misguided actions by the company don't create a contagion that usually ripples through an entire industry. You get, if a company does it extremely poorly, maybe even goes bankrupt, it doesn't ripple through the rest of the industry. And in fact, it often presents opportunities for others within the industry. But if you're a Bitcoin company, especially one focused on base layer activities, then your behavior can have material implications on the maturation rate of the entire ecosystem. And if you're like me and you believe that Bitcoin will ultimately have a dramatic impact on the very quality of human life, then anything that might negatively impact the adoption of Bitcoin is an attack on humanity itself. That's why I started this series with the episode on Core Scientific. Because if you'll forgive me, they really fuck things up, not only for themselves, but they love carnage of well-meaning people and well-intended companies throughout the entire industry, throughout the entire world. And the aftershocks of what they did are still rippling today. Some of the other companies, public and private alike, but frankly more public than private, also got caught up in that. And they created a lot of damage too. And in fact, I would say it's highly likely that the fact that these companies were public and had access to so much capital that caused a lot of these problems. Now, some will say, well, hey, in the end, it'll all sort out. Bitcoin will be fine. I'll say, yeah, I agree. It will. But in the meantime, a whole bunch of people who were trying to do great things, who were trying to find their way to contribute to Bitcoin, got slaughtered. And the very adoption rate of Bitcoin and the maturation of Bitcoin got slowed down. These are not victimless crimes. And I don't mean crime in the criminal sense. I mean it in more of a figurative sense. As I stated before, I don't believe it's possible to be a public mining company and adhere to the ethos of Bitcoin and consistently do what is best for Bitcoin. There are several problems. The first is that as soon as a company goes public, it changes the time preference of the company. No matter what the management team might say, it forces them into a 90-day mentality. I can promise you that as a private company owner of several private companies, that we don't evaluate ourselves very strictly in 90-day windows or 30-day windows, but especially 90-day windows. The public mining sector or the public companies in general, what happens in every 90-day window becomes extremely important, and the world judges you every 90 days. And so it's very difficult, especially over an extended period of time, for that to not start becoming a very important part of the mindset of that organization. It also changes the metrics and the business practices. And I'll give you an example back from my old days at Gateway. Early in the 90s, Gateway was a very successful company. We had lots of cash. We were private. Many of the other companies in the industry were public. We would often get a phone call, say toward the end of a quarter or toward the end of a year, where a supplier of memory, hard disks, CPUs, etc., would call us up and say, hey, there's 2 weeks left in the quarter. We're missing our numbers. Would you be willing to buy maybe the next 2 months worth of your hard disk drives up front for a large discount? Now, let's say that that big discount on an item that we certainly were going to need would really impact and reduce the cash position of the company. Now, as a private company, knowing that it was going to have a dramatic positive impact on our margins in the subsequent couple months, we would easily say, yes, we will be happy to pre-buy or buy ahead a whole bunch of our inventory. And as we exited the quarter with our private balance sheet, it would show a greatly reduced cash position and a greatly increased inventory position. But we didn't care. As soon as we became public, we cared a lot. We cared a lot because the perception from analysts and from outside shareholders would be that this was a company in trouble, a company with greatly reduced cash position and greatly increased inventory position looks to the outside world like one that's getting itself in trouble. So what would we do? We might buy a few weeks of those hard disks at a great deal, but only so much that the balance sheet would not be dramatically impacted to the negative. Meaning, we made a lesser decision for the long-term interests of the company and a better decision for the short-term interests of the company. Now, another thing that happens is that after a while, the complexion and culture of a public company has a tendency to change. If the company is growing, maybe it's growing very well. Gateway went through this, going from a 1 billion to 6 billion to 9 billion, from a few thousand employees to 10,000 employees to 25,000 employees. The moment there's a little stumble, there becomes tremendous pressure from the analysts that maybe the management staff isn't equipped to handle the next phase of growth, and that maybe new blood needs to come in. And of course, on the other side, if a company, instead of a little stumble, really has a big setback, then there's a tremendous amount of pressure. And of course, as time goes by, people retire, people quit and move on to other jobs. And there's a certain outside perception that needs to be addressed when bringing in those people. There might be some subtle changes where a company like my old company, Gateway, which really could have cared less in general about the pedigree of the people that it hired. I was very blessed. I came from a University of Wisconsin, Milwaukee, and I had a technical degree, but I didn't go to MIT or Berkeley. But I was blessed to have had the opportunity to still become the CTO of a Fortune 200 company. Well, there's sometimes a change that will occur where the pressure will be, well, maybe you should hire the person who did go to MIT, or maybe came from an even bigger company. There's this kind of whole pedigree thing that happens. Another thing that happens is a change in the financial goals. So when you're a private company, generally, it puts you in the position where you need to focus on creating profit and creating positive cash flow. The investors and the holders of that company, they certainly want to make sure there's enough money within the company to help it keep growing. But generally, they want money too. They want dividends. They want distributions. I think that's a very, very positive thing. In today's world, especially with technology companies, certainly in the Bitcoin space, there's a different mindset. And the mindset is not to pay dividends, sometimes not even to focus on profitability, but to focus on growth. There's this perception that growth is the be all, end all. And a lot of it comes, I think, rooted in the Keynesian economic theory and the inflationary environment that we live in, where what people want is they want their stocks to grow. They want the value of the stocks to grow. They don't really want dividends, because when they get dividends, they have to figure out where to put those dividends. And if they don't have a place to put them, then inflation starts eating at them. So it creates this, I think, very dangerous mindset. Interestingly, one that Bitcoin is here to change. You know, I think one of the fundamental value propositions for Bitcoin is being deflationary. If you're not familiar with that, go read Jeff Booth's Price of Tomorrow. He does a great job talking about that there. But it's only in a deflationary environment where a currency appreciates in purchasing power with time, where you start to look at investments from a fair perspective. And I think in that environment, that world, I think that the one that we're all trying to aspire to, that's what's really important. And yet we have companies kind of sitting at the base layer, at the core of what we're doing. We're kind of being built to drive the exact opposite way of that. In fact, being driven to operate in a very Keynesian, typical Wall Street inflationary manner. Last thing I'll say about problems is that statistically, public companies have a very poor track record. No, private companies are no cup of tea either. They're difficult. But just an interesting stat, you know, in the current Fortune 500, only 10% of the companies, about 50 of the companies, have survived 70 years. And when you start cutting back and you look at how many have been there how many from 70 years ago, how many from 50 years ago, how many from 30 years ago are still there, you'll see that they're dramatically small numbers, surprisingly small numbers. Survival rate is bad. Some of them went bankrupt, lots of mergers and acquisitions and hostile takeovers and all those sorts of things happening. When you look at a growth industry, an immature industry like the one that we're in, even in a 5 to 10-year window, you're going to see dramatic turnover, lots of bankruptcies, lots of mergers, lots of takeovers, lots of failures. And that's to be expected. But much like Core Scientific, which I pick on, and I believe rightfully so, because they didn't even last 11 months. And in the meantime, piled up $1 billion of debt and blew through the $200 million they raised in an IPO. When you get companies that are behaving that way, then it's very, very disruptive to the industry that you're in. And clearly, with all of those things, these are motivations that don't put Bitcoin first. They're putting shareholders first. They're putting management teams first. They may be putting egos first, but they're not putting Bitcoin first. Because ultimately, a public company has the motivation that's tied to stock price more than anything. In fact, they kind of are legally bound to have that as their main motivation, regardless of what the implications of driving that price higher would be, what actions might precipitate that. Given all this, for some companies at the appropriate point in their growth or maturity, going public might make sense. But I think for miners and many others that are existing within and close to the base layer of Bitcoin, then I don't think this is a very wise thing to do. No, I can say with hindsight that if I could go back 30 years and I'd had a large enough vote, I didn't, to have stopped Gateway from going public, that I would have. Because I believe had we not gone public, we'd still exist today. And we'd be a technology company having an impact on the world very analogous to what Apple has achieved. Unfortunately, even at inceptions for many companies, the goal is not providing the world with a better product or service. By the way, what I think Apple does well. But instead, it's building a company with an IPO or some massive exit as the goal. You'll often see founders or entrepreneurs brag about how many exits they've had, how many IPOs they've accomplished. This is usually a clue that their priorities are twisted, that these are greedy individuals who are money motivated first. They may make products, but they make products with the goal of an exit, as opposed to making products to make the world a better place, and then believing that financial rewards will come to them as a result. To each their own, but I may not respect their approach. In fact, I find it, the epitome of fiat, the very dark side of fiat. I respect that each person has a right to pursue their own path, but for me, I can't imagine living that way. I've spent 40 years working with the goal of bringing better products to the world, from my early days designing laptops and computers to now what I do in Bitcoin. To me, which of the two drives you is crucial to evaluating the quality of the company and the people running it. Ultimately, I think what separates Steve Jobs or Elon Musk from people like Sam Bankman-Fried and Craig Wright is this very thing. People that work in areas where lives are at stake and we're acting with the highest ethical and moral standards, with the highest ethical and moral standards. When those things are crucial to the fabric of society and the quality of human lives, there's often an oath associated with it. You know, the doctors take the Hippocratic oath, the nurses take the Nightingale oath, judges and policemen and presidents, you can snicker, all take oaths. You know, maybe for us miners, we should do the same. I've thought about this for a while, and many of you have probably heard me say, I have worked very hard to always keep barefoot mining operating within the ethos of Bitcoin. So I've been thinking about this, and I now think, you know, maybe something like this, a miner's oath, might be appropriate. And so I personally state, and on behalf of Barefoot, the following: I willingly and proudly accept my responsibility to help protect and secure Bitcoin's base layer. I'll do so by making decisions and taking actions only within the ethos and best interests of Bitcoin. And I prioritize this over my financial gain. I do this because Bitcoin gives us all a path of hope and freedom. If that resonates with you, then I suggest you think about the companies you support, where you place your money, the people you believe in, the things you follow, because it really makes a huge difference where you put your money and where you put your support. I think in the end, if you think with Bitcoin first and you believe that the right output will come in the long term to you by doing that, then you're my tribe. And I hope you're with me. Regardless, you know, I wish everybody the best. I wish no ill upon anybody. If you're out there and you're part of a public company, please don't take this as a criticism. But I still will challenge you to think about what motivates you. Because I think in the very end, and as an older guy, doing what's best for the world, that which pushes society forward, is really what makes a difference in the world and probably what will make you happiest.